All right, Chevron just reporting. Everybody take a look at these numbers that are just hitting. Chevron says that it's earned an adjusted number of 90 cents a share. That's right in line with what the street was expecting. Revenue came in a little better than expectations. It came in at $32 billion versus the $30.67 billion that the street had been anticipating. And they're saying that upstream earnings, $2.35 billion. The downstream earnings were $5 million. The results for those downstream earnings were hurt in part versus a year ago because of the ongoing downstream margin and volume effects that came both from the pandemic and the impact of the winter storm that they're still working their way through with that. But earnings overall were strengthened, and that's primarily because of the higher oil prices as the economy really starts to improve. Of course, we've seen WTI trade above $64 a barrel. That's a huge, huge improvement from where we were at this time last year. Remember, just a few weeks ago, a few weeks ago, we were at the point where people basically had to pay you to take oil off of their hands. It was a very brief moment, but oil prices under huge pressure as the global economy started to shut down. This morning, Chevron shares right now down by about 90 cents on this. Again, in line on the bottom line and a beat on the top line. We're going to be speaking with Chevron CFO Pierre Breber. That's coming up at around 8:15 a.m. Eastern time, and that is a first on CNBC interview.
Shepard Smith here. Thanks for watching CNBC on YouTube.